What's up, everybody? It's your host, Corey Reyment, another episode of the Wisconsin Investor. Appreciate you guys tuning in today. I have an exciting episode for you guys. I love bringing young, hungry people on this podcast, and I have a special treat for you guys today. I met this gentleman a few weeks back down in Madison. He's currently a senior at Madison in the real estate program. So I'll let him talk a little bit about that. But we had a great conversation, a great breakfast. I tried to recruit him to work for us, but he's not hireable, unfortunately for me. But I said, man, I got to have you on the podcast, bro. So without further ado, Collin, welcome to the podcast, bro. How you doing?
I'm doing great. I really appreciate you having me on the pod. I've always told my friends I want my own podcast one day. So I guess this is a good intro to this. It's getting a little used to, so I'm very excited. Thank you for having me on.
Absolutely, man. Absolutely. Well, tell the audience a little bit. So you're a senior at Madison, but you're already in the business. You've been in the business. You grew up in the business. So give us a little background of like your upbringing and, you know, some of the things that you've been through in the real estate space.
Right. Yeah. So like you said, I've been in the business technically, I guess not actually since I've been 6. My dad's been flipping homes before it was popular. He was driving for dollars before it was popular. I think I should tell that story at some point on the pod. So yeah, I've been probably around. I've been visiting duplexes, multifamily units, single family homes since I was 6, seeing kind of like the management side of the flips, managing the contractors and whatnot. And I would do a lot of labor work, you know, very simple labor work. I'm not doing no tile setting or anything like that, but just around the business, seeing what needs to be done. You know, how much does this cost? How much does that cost? Seeing my dad, you know, conversing with people, whether it's on the phone or dealing with the contractor. I've been around that for literally ever. And then kind of moving 10 years forward, I'm like 15, 16. I'm like, Dad, I like this stuff a lot. Maybe it's because I like me and you are similar. I don't know. I really like this. I think I want to be in real estate. He's like, okay, but you can just, you know, kind of, you know, hop on and be an apprentice per se. And then really kind of take on a more formal role of, hey, you're going to manage the flips. You're going to manage talking to the people. You're going to, you know, I'm going to send you over here. Go pick up this. Go pick up the material there, you know, whatever. And then, you know, do that in high school. And I'm like, okay, like, what do I want to do with my life? Because every high schooler has that. And I'm like, okay, I'm just going to go to college because I don't know what else to do. I end up at UW Milwaukee. And I'm like, I'm there for a little bit. I'm like, I don't know if this is cutting it. I feel like I might drop out or something like that. It just wasn't, you know, wasn't jiving. Yeah, right. It wasn't mentally challenging. I know it was for my freshman year, but then I was like, I don't know. I don't know about this. Then I found out from one of my buddies, Madison has a real estate program. I'm like, what is a real estate program? Right. What does that mean? Like, what? Am I going to get my license from there? No. Like, and then I looked into it. I'm like, oh, they have the #1 program in the entire country for real estate. Yeah. I'm like, this is interesting. Okay. And then I looked more into it, the real estate financing side. So I was like, I'm going there no matter what. I'm getting it. Yeah. Basically dedicated 6 months of my life after during my freshman year to get everything together to get here. And the last 3 years now, I've been at Madison studying real estate and finance. Nice. And I've just been doing a little bit of acquisition stuff, and a little bit of like, I guess, asset management on some flips with my dad and, you know, a few of his buddies as well. So I've kind of been just flirting with different people, doing different little things for them. So, and now we're awesome here. And yeah. That's awesome, dude. There's a couple things I want to unpack here. One, I want to understand the Madison program because I'm kind of like you. I was like, what do they actually like? I have a really good buddy who's he has like a huge business in real estate, flips and everything out in Virginia, but he's a Madison real estate program alum. Mm-hmm. But I've never really asked them, like, what do you actually learn in that program? Like, what are they preparing people for? Is it mostly like commercial development? Is it what exactly is involved in that program? This might be an all over the place answer, but it is more commercial. There's one residential class actually, but it's basically all commercial, whether it's multifamily, industrial, office, hospitality, whatever it is, hotels. We've talked about it all. Like I've worked on an appraisal project for an office building downtown Madison, down the street from me, right by the Capitol building. And it was owned by Eric Hovde, if you're familiar. We were able to work on like a project like that. But yeah, more to slim it down, I'd say it's more the investment side of commercial real estate and building up the financial modeling side of it, the asset management side of things too, and mainly real estate finance per se. Because in a flip, it's, hey, let me get the ARV, do 75% of that, blah blah blah, all that.
Yep.
Pretty simple, honestly. It's great.
Right.
But then there's a bunch of even though it's not too hard, there's a bunch of nuances in commercial real estate, and the program kind of prepares you for like, hey, you see, there's a hotel right next to me. Hey, we're going to develop this hotel. This is how it all comes together. It basically tells you how it all comes together as one. Like, you look at downtown Chicago, who's financing the debt, who's getting the equity, who's raising the money. It basically gets you through and makes you think through the entire process of creating a sky high building is what I would say. Wow. Not just a home. You know what I mean? And we have a lot of people that will either go on like the debt side of things, or they'll go into private equity and maybe they're not raising capital right away, but they're then in the Excel sheet, trying to crunch numbers on the phone with people like, hey, yeah, no, we have this 48 unit down in Iowa. We're looking to sell it. And then most people from the real estate program are analysts per se at these commercial real estate companies that'll then underwrite the deal and get back to their investment committee team and say, hey, this is a deal, or hey, this is not a deal, and this is why, because of XYZ through the financial model. And we also see it teaches you how to do like market analysis of like, what's that software called? I always forget the name. Like there's a software that you can see the walkability of a certain location. Sure. The live traffic. How many people pass on this street? If you want to do a base, is this a spot for it? Is there 10,000 people coming, or is there 50,000? There's little nuances that they teach you, and that's a very long-winded way of saying that they teach you basically from the ground up of how to finance a deal or how to develop a deal.
That's fascinating. I just had Mason Clark on. I think he's the episode previous to when you'll drop here, maybe 2 episodes back. But he is a partner at Boardwalk and Park Place Holdings, and they're really big up in Northeast Wisconsin here in the commercial side of things. Yep. And I mean, they're a 9-figure business, and he went to school actually to be a financial advisor, and he was a financial advisor for a while. And then the gentleman who's the CEO of the company recruited him over to be like his acquisitions guy. Now he's grown into like asset management. He's kind of learned all of this stuff in the biz, right? Kind of grew up in the biz a little bit by starting out in acquisitions, then, a bigger role. But what you're saying, man, if I'm listening to this and I've got a freshman in high school right now and they're interested in real estate, I'm like, get your grades up and get your butt to Madison and get in this program. Cause I'm like, dang, I wish. For me, I find that stuff fascinating. Like we were in New York, my wife and I, in November of this last year, and I'm just looking at these buildings and I'm like, I want to build one of these. Like this would be cool. But I don't know, like I don't have I'd have to go back and do Madison's program or like,
hey, you can go do your MBA or your master's. They have
all right. There we go. So anyway, I think that's really cool.
For the Madison program, I think we have the biggest real estate alumni across the country. We have alumni literally everywhere. Boston, New York, Chicago. I think Chicago's the biggest alumni area. California. And real estate's all network. It's who you know, really, at the end of the day, right? Can you get this deal financed? With my background, and I hope so. I haven't done this yet, but I'm hoping so, that me being at this program and being an alumni of this program will then allow me a foot in the door to talk to these maybe, people that finance the debt type of a thing.
For sure.
You know what I mean? And that wide base you have of the network across the country is the biggest value of the program. The education is great. Everyone can figure out how to finance a deal, like a multifamily deal. It's not too hard. There's some nuances to it, but the real value is the relationships you make in class. Like a lot of I don't even call them professors, because most of them are investors or, they worked in the industry. They tell us, hey, the person to the right and left of you might do a deal with them down the line. Make friends with them. We're talking with your people every day. You're talking with your fellow peers every day. This isn't the finance program where, hey, teacher, what's the answer type of thing. No, this is a full discussion. This is a conversation, a never ending.
Yep. And what's interesting, Collin, every episode, I think we talk about the power of networking, no matter if you're doing flips, you're doing single family rentals, whatever the case is, like networking is the key to it's the hack. Everybody wants a hack these days. It's the hack to speed your progress up like tenfold, comparatively speaking, to somebody else out there. Because I know there's people out there. The easy part for guys like you and I is very easy to walk into a room. For me, anyway, it's very natural for me to walk into a room of people and just start making conversations and be curious about them and what their situation is and learning. And man, tell me about this. And it's not a take type of a thing. It's just I'm curious. Tell me more about how you got here. That's why I love this podcast. I get to sit and talk to cool people like you, and I get to learn from guys like you or people who are doing 9-figure businesses or people who've done 4 flips. Like I can learn from people on every aspect of the scale. And I think the people out here listening to this, that's more of a challenge for their personality type. That though is the biggest skill, if you're listening to this, that I think you can improve on to accelerate your success, is to figure out, how do I get outside my comfort zone and develop those networking skills? Because it is a skill. Some people it's easier. It comes more natural for somebody like me, personality wise. My son, he's 11. I take him to networking events and he's like, I gotta pull him out of there. I'm like, bro, we got to go home, dude.
Killer.
Yeah, he's already cold calling at 10 years old. I'm like, dude,
we were talking about that. Yes,
yeah.
That's awesome.
So he's already naturally that way. But my daughter, if she said, hey, Dad, I really love this real estate idea, I really want to do this thing, for her, it's going to be much more challenging to build this networking muscle. And it's going to take a lot more effort. But if she can do it, she would be able to accelerate her goals much quicker. It's not to say if you don't want to do that you can't be successful. It just may take you longer. And you may have to be a little bit more creative on how you get there. Right. Exactly.
Something to add on to that too. I was just talking about this on the phone with my buddy. The book, How to Win Friends and Influence People. I think that's what it's called. I might have mixed that around.
Yep.
Basically, if you haven't read that book yet, you should. And I can also just summarize it for you. It's listen to the person more than you talk about yourself, or you know what I mean? And hear them out, let them speak, let them talk, ask them about themselves, and in real estate, like we're just talking about the network thing, at the end of the day, for a 12 unit in Madison, everyone and their mother is trying to get that deal, right? At the end of the day, who gets it? Whoever connected and builds the most rapport with the owner. That's it. That's that. And guess what? They didn't have more money. They didn't have the bigger company. They were just more personable.
Correct. That's what it takes. I tell our acquisitions guys. Right. Yeah, I tell our acquisitions guys, if you're not getting deals for less than what somebody else is willing to offer, then you didn't do a good job with that seller. You got to be willing. You got to be willing to, or be good enough, skilled enough that you can go offer somebody $100,000 for the deal. I should be able to go in there and offer $80,000, and I should be able to get that deal because they trust me, know me, like me, and I did a better job solving their actual problem, not just throwing money at the situation. Yep. So understanding, asking good questions, getting to the root of what their actual problem is, and then building rapport, solving the issue, the actual root issue. Rarely in our business, it's interesting, Collin. We have some realtors out there in our network or in our area. They just cannot stand us for whatever reason. They hate us. And it's really fascinating because they think we're ripping people off all the time. They're like, oh, you just got there stealing people's houses and ripping them off. Right. And I'm like, oh, really? Like when you list somebody's house and you charge them 6% of their money, you just took 6% of their money for putting it on MLS. And no disrespect to my realtors. I know you guys do more work than that. But to summarize, like if we're going to get a little battle here, I could say the same thing about what you do on the other side as a realtor is you're taking money out of there. Why don't you just do it for free then if you're altruistic? Just list their house for free and don't take any commission, right?
Something I'll say about that too is the direct, do you want to do the direct to seller marketing? No, I promise you don't want to do it. It's hard. That's why you guys make great spreads on the assignment fees because it's hard. It's really hard. That's why. And you're doing a favor for people like my dad who don't want to do any of that work at all. That's where the money is made because you're doing the dirty, gritty work. It's easy with the sellers to say, hey, let me sell my house. All right, I'm going to post some pictures, get the description up, and I'm going to, schedule it through a line showings.
Mm-hmm.
It's pretty easy.
Right. Yeah. With the sellers too, what I was getting to is like the people that we do business with, we're not forcing anybody to sign a contract with us. In fact, we try to give them every other option besides us, because we know that we have to be the lowest dollar amount even compared to other investors. Like I can't pay what other investors will pay. So I have to bring more value to that seller, right? And I'm telling you, of everybody that we have a solid transaction with, price is never the most important factor for them.
Yep.
They say it on the surface because they don't know what else to describe, right? But think about like one of the sales trainers that we listen to in the industry. He had an example one time, and I was like, that makes so much sense. Like all of us have a cell phone, right, Collin?
Yep.
If price was the most important thing to us, we would all have flip phones with no data, right? And it would just be a cell phone, right? That all we did was call. We'd have so many minutes that we could call a month, and that's what we do, right? But we all pick like the nicest iPhone because it's got the camera. We got unlimited data, right?
Cameras.
We got 2 cameras, not just one. We got 2, right? Yep. Fastest thing on the planet, right? For some of us, and some people, they might say, you know what? I don't need all that stuff. I'm gonna go somewhere in the middle. But it's not because of price. It's because of value and solving a problem that we have in the business. And that's what we do with sellers when we meet with them is what is your actual problem? Yes, price is important. It's a factor. Let's put that. Okay, I hear you. Yes, price is important. We understand that. But what else is important to you? And then let's get to the root of that and solve that piece of it for you. And we're going to have a much smoother transaction. You're going to be so much happier at the end of this. And, we pride ourselves on reviews. And I think we have over like 350 5-star reviews right now between Google, Facebook, and the BBB. So it's like the people that are saying we're ripping people off. I'm like, just go read our reviews. Like you'll cry reading some of these reviews, dude, of what we've done for people, in this business and helped them out of some really difficult situations.
Haters, bro. Realtors love to
I'm
licensed myself, and I'm not really a realtor per se, but I just, realtors are haters.
Yep.
They're hating that you're making a $5,000 or $10,000 spread.
Yeah. And not all of them.
I was strictly a realtor. I might be too. I might be salty.
Yeah. Well, they think we're taking business from them, but what they don't understand is a lot of these people would never be a good candidate to list this house on the MLS. Like it needs too much work. It's never going to be able to get financing. Seller needs a short timeline, and they don't have time to sit and wait, and somebody's financing fall through. There's a lot of other things. And what we do in the industry is we're only working with like 5% of all transactions that happen in the real estate space. Like most people are a better fit to list the traditional way.
Right.
So, it's not like,
that's why you guys provide so much value, is because like you're saying, this house can't get financed on the MLS. You have to buy it with hard money or cash or whatever it might be. Yeah. And you're just targeting that little segment. You don't, and a realtor doesn't want to deal with them anyways. You know what I mean? And also something on top of that too, like something with some of our flips is like, you hear them out, like you're saying, price is a part of it, but then, okay, besides the price, like, why are you willing to discount your property 25% for me already? Because you can take this to the retail market and get more. I promise. I'm telling you that right now.
Yes.
Tell every single one of them that.
Yep.
Builds a little bit of trust, whatever. And then, you get to their root problem. Oh, well, there's just a lot of stuff in our place, and, we just don't, it's going to be a hassle to move. Oh, okay. Well, no, Mr. Seller, why don't I give you $60,000? It might be a little bit less than some of the other people that, offered you, but I'll pay for all of your moving costs.
Yeah. Now you created value and you solved the problem.
And exactly. You did more, and you thought more about them than your bottom line of what I can pay. Correct. You know what I mean? Bake it into how much you offer, but hey, I'll pay your moving costs.
Yep.
Or I'll pay this cost, because to me, it sounds like what's holding you back from taking the other offers, or why didn't you take the other offer? Oh, well, da, 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 da. And then you figure it out. Okay, well, what I can offer to you is boom, boom, boom.
Exactly.
And a realtor is not doing that either.
Correct. And you know what, Collin? We always say sales done right is done for somebody, not to someone. Right.
Right.
And so when you're selling in our business, selling really is acquiring a property, right? We're selling them on why they should choose to work with us. We have to do it because it's the best thing for this customer, right? It has to be a win-win. We both have to get something out of it. Otherwise, it's not going to be a good transaction. Every transaction has to be a win-win, or somebody's going to feel slighted on the other side.
Right.
But there's got to be give and take and good tension and polarity in any kind of transaction. But it should be, your mentality should be, I'm doing this for my customer, not to them, right? I'm not manipulating them. I'm not doing anything else. I'm doing it for them. And when you have that conviction, like what you're talking about, it's like, well, I just solved your problem. Now you don't have to clean this thing out. You can just take what you want, leave what you don't want, whatever you're doing to really understand their situation. Now all of a sudden you're the hero, and they don't.
It all comes back to being personable.
Yeah, and they forgot about the 20 grand they left on the table because that's not really the most important thing to them.
Right.
And people can't wrap their brains around it. Yes, exactly. Dude, this is the audience. You see why I wanted to hire this kid? You get it? All right. There it is.
Realtor hate needs to stop. I will say that. Everyone can win. I wish I heard the number a few months back, but there's like however many millions of transactions in real estate a year. There's enough for everyone to eat. Every single year that goes on, we're getting a new property that's a quote unquote dirt box, whatever. I don't want to say the word. I don't know if we can swear on here, but every year that goes on, there's another house that'll be able to be flipped or another house that'll be able to be sold, especially for realtors. You guys have a majority of the market anyes.
Mm-hmm. And what's interesting is
their home.
Yeah, most of the time what ends up happening, Collin, we go in and we say, hey, why are you thinking of working with us? Like, we can't pay you retail. That person really needs retail, or they want retail. They don't have distress. The house is nice. They don't have a timeline where they have to have something done in a certain period of time. We refer that to realtors that aren't haters. And we work really closely with them. We get a referral fee because my wife is licensed. But it's like, we're working really closely with realtors who aren't having their walls up, and then they'll send us deals that they're like, hey man, this one wouldn't work good for the market. I thought this would be a good fit for you guys to help them out. And we work really, really closely back and forth with realtors to serve the customer, right? What's best for this person. If it's put it on the market, great. Let's get a realtor in here and help you put it on the market. If hey, realtor came in, not the best fit, then they call us and we go work with that person and we take care of them and help solve their problems. So
there's a way for everyone to eat in this industry. I used to, when my dad would be like, oh, I'm going to give this person this deal or something, or just not give them the deal, but you get what I'm getting at, refer them out.
Yep.
I'm like, why are you doing that? There's $10,000 to make here, da, da, da. But, I was 3-4 years ago. I just didn't understand as much. Not that I understand everything now, but I was like, why would you do that? But then that comes back to you eventually, because then you thought of them. They're going to want to think of you or get back on you, at least a good business person per se would want to, because then that just keeps going. Corey gives me this, Collin's going to give Corey that, and it just going back and forth. And then on the contracting side of things, what if you refer out contractors? They're going to want to maybe, hey, I was in this house, or I noticed that this house across the street from where I was working at, it needs some work. You should give them a call. That's a lead that you didn't have before.
Exactly. Yeah.
There's a way for everyone to eat.
Yep. Good referral networks are important, man, for sure. I want to go back to something though, Collin. You just brought up the contractor thing. So you said when you were 15 or 16, you were managing some of the flips?
Yes. So I wouldn't say I was like, hey, tile setter, go do this. But, I would pick up the materials. I know a decent amount about, different nuances with tile, flooring, whatever it might be. This is how much it should cost per square foot for LVP or hardwood floors, or, to refinish your hardwood floors, it costs this much. So I have the base knowledge of that, and then just kind of guiding them, hey, yeah, this room needs to be done, but that room doesn't, type of a thing. So
I got you.
That's kind of the managing part of it, so I don't, awesome. So then my dad or whatever investor doesn't have to, go out there and drive back and forth type of a thing, or, hey, go deliver these materials. But, there's some times where, hey, I need you to demo. I've demoed for, I don't know, 10 years, maybe.
Okay.
You know what I mean? It's fun and I love it. And you get paid decent amount. You get paid good amount,
Yeah. Hey, people go to
hardwood floors or anything, but I can demo.
People go to rage rooms now and pay to do it. Just come do it on Collin's flips, man. We'll let you rage out in one of these flip
My girlfriend's like, oh, are you demoing today? I want to come. I'm like, no, you don't. Trust me, you don't want to come. It's going to be a little dusty, but no.
Yeah. Get your mask on, get your goggles. Boom. Get in there and start swinging, man. That's awesome.
Yeah.
So you were getting paid to help out with the managing piece, or were you doing this just as a learning experience when you were 15?
So in high school, the managing part I was not getting paid for. It's just insane experience. And I understood that at a younger age. But then for like the demo or the hard labor that I would do, or like, or if I'm going to the dump per se, getting a trailer, renting out a trailer, loading it up and, clearing out the house, I would get paid for that.
Okay.
But like the managing part, that's just so much value that my dad and these other investors were allowing me to take part in, that I was in high school. I don't need the money, quite frankly. It would have been nice, but that experience, it's invaluable.
Yeah. Well, that's amazing, dude. And as I'm sitting there listening to it, I'm like, if you're a 40-year-old dude sitting out here, lady sitting out here, and you just want to get into this business, maybe something to think about too. You don't have to be a high school kid. Like if you've got a good, daytime gig and you're like, man, I really want to learn this business. How can you bring value to somebody who's already where you want to be? Right? Can it be through just going and volunteering to go be a runner for them and kind of learn the ins and outs of like what materials cost, right? Without you having to be spending your own cash, you can be out there, shopping for somebody else's flips and helping out, design stuff and just learning things. And that stuff is going to make you so much money if you apply it in the future for your own stuff. I thought that was a good little nugget there that I want to kind of circle back on with you. Yeah.
One of my dad's favorite things to say is that one of the best in real estate, one of the best educations you can get is by going to Home Depot.
Oh, okay.
That's what I think. I know what this costs. I know what a stainless steel, whatever inch fridge costs, or you know what I mean? Like knowing the different heights. All right, well, this is not going to fit here, or, being able to measure out a kitchen, little things like that. You gotta learn these ins and outs so you're not getting screwed by your contractor. You know what I mean?
For sure.
'Cause most people don't have, like with my dad, he's been in Milwaukee for 35 plus years doing this, or 35 plus years being around talking to people, at least, right? So he has great connections and contractors. He knows he's not getting screwed for the most part. But for someone just getting into it, it's like, they kind of see you as, fresh meat per se. Like, this kitchen's going to cost $15,000 to do.
Yeah.
Me and my dad are over here like, I don't know about that. Like, you know what I mean?
Yeah.
Yeah.
That guy's making his living off his annual bump right there. He just gave himself an annual bonus right there off your kitchen, man.
$5,000, and this is going to take me 2 weeks. He just made that spread on you just because you don't know. Just because you didn't educate yourself. Basically, that's basically all that. Or you didn't want to talking about calls. You're talking about, Collin, you went to school for 4 years. Now, the first year we all know in college is general eds, and you're not really in your program too much. Right. Let's call it 2 years probably where you've been really heavily focused on the real estate side of things, and you spent 2 years in this learning this stuff, right? So I think it's kind of interesting, like when we think back, like as an investor out here, the barrier to entry is like pretty minimal to get into real estate investing. You can there's hard money lenders that'll lend to anybody, right? As long as you got a pulse and a good W-2 right now. And that's really the biggest barrier usually is how do I finance this thing? And once people figure that out, they're, if they're driven, they're gung ho, but the expectation is that they're going to win on every deal and they're going to make, $10, $20, $30,000 every time they flip something. Sometimes that's not the case. And they don't, sometimes they don't look at it as the education piece, right? And they don't spend the time like you're talking about in preparation for that. And now there's a balance. There's analysis paralysis people who will prep forever and never take action. And then there's people like me who are like, let's just go. We'll figure it out as we go. And we don't do any preparation. And then we get bit along the way, and it costs us in the long run for not doing that. And then there's those people right in the middle who are doing the right thing, like they're learning, applying, learning, applying, learning, applying, and they're hitting singles and doubles all day long. And so I think it's just, if you're out there listening to this, I think what's kind of triggering for me, Collin, is like you're spending 2 years paying to learn, probably paying a pretty good penny to learn real estate business. Yep. Plus, you spent time paying your time in high school to learn a lot of the flipping side of things and everything else. So if you're out there listening and you haven't done any kind of that grunt work, boots on the ground type of education yet, that may be a good place to start. It's just go to the Home Depots, go to other people who are doing things and ask them, hey, what did you do on this flip? Show me the before and afters. Pay them for their time. Go pay them. Like, hey, could you coach me and show me how you did some of these flips? That $1,000 you paid someone to spend a week with them is going to pay you tenfold down the line. It doesn't matter. You have to look at it in terms of like, I'm spending $1,000 and it's a sunk cost, but lifetime value of me learning that is infinite. Cause now I know the skills for the rest of my life of flipping. You know what I mean?
Yes.
It's like that $1,000 investment, you have to be willing to spend money, or else
Yeah.
you're going to stay in the same spot.
Exactly.
You know?
I was just listening to a sales podcast this last week, and the guest that they had on, he like sells from stage, he speaks and then sells from stage and does all these things. And now he's turned how he's done that into like a coaching program. He coaches other salespeople on how to do this. But to get into like his mastermind, like his minimum coaching, it's like $350,000 a year to get into it. But he had a bro come in. Guy was doing 1.2 million in his business and sales. Went to like $4 million the next year in sales. So guy got 325 grand. This guy got an extra $3 million from paying for the education, right? And his other levels like $800,000 to get into the next level thing. I mean, it's just like you think about those numbers like, oh my gosh, I could never imagine spending that much money on coaching. But you got to look at it as like, is this a good investment for me? Yes. And what am I going to get back on the investment? If I know I can invest 20 grand, say, in coaching, and I know I'm going to be able to make $1 million because of that 20 grand, that's a hell of a return on investment.
That's an insane
lifetime value. Right.
Think about the probability of things. Pay your market tuition. Think about it in terms of probability. If I pay $20,000, there's a 75% chance, let's just making it up, that I'm going to be able to have this skill for the rest of my life. And that skill is going to make me $10 million across my life.
Mm-hmm. Yeah.
Ooh, that 20 grand is really well spent then. That's better than investing for 40 years and compounding like Warren Buffett, you know?
Yes, right. That's right. Exactly. And you're accelerating that timeline. So time value of money goes up because you sped it up. It's 100%.
Exactly. Right. Like if you want to make you're getting into flipping right now and you buy your first deal, I don't want to say you're going to get burnt because I don't want to be negative, but there's a chance, right, where you are maybe in your situation, Corey, you just went at it, right? Mm-hmm. You're going to pay your market tuition per se on that deal. Mm-hmm. You might lose. That's your market tuition. Mm-hmm. Whereas you could have paid someone like my dad maybe $5,000 to walk with him through a whole entire flip for if it takes 2 months. Mm-hmm. You just saved yourself the market tuition that you just lost if you would have done it right away.
For sure. And you got systems and processes probably from that if you're doing if you're being a good student, that now you're going to speed up your processes, right? So the flip that otherwise probably took you 6 months to do, maybe now that takes you 3 months to do, and you're much more profitable. Now you can do another flip within that next 3 month period that you otherwise didn't do. And this is one of the reasons, Collin, I was just having a conversation. We took our team to Mexico. We just got back on Monday as a little incentive trip for hitting our goal last year. Nice. And
maybe I do want to work for you.
Yeah, there you go. This is actually I'm slightly recruiting you here. You see that? But interestingly, I was having a conversation with one of our teammates who's newer into the real estate space. And I said, I will die on this hill that if you are out there and you want to get started in real estate and you're just gung-ho like me, you're like, let me just go. I just want to go. I don't want to go do this other thing I was talking about. Start with rentals. And buy rentals, find a good property management company that can do the improvements for you and not screw you. Right. And just keep your W-2 as long as you can and just buy assets. Boom. Put them in with your manager. Buy asset, put them in the manager. Because what you're describing, what I think a lot of people don't understand is they're like, well, I think I'll do some flips and some rentals. Those are two different businesses.
Completely different.
Literally, you're having two businesses that you're trying to run at the same time while you keep a W-2 job and you're split focus. You can't manage everything. Most likely, you're not going to get a bookkeeper, right? So now you're going to have to try to learn how to do bookkeeping. You know, you're spread so thin that you can't be good at any one thing. And so if you're like, if you're like, hey, I need cash, like I need to build my cash reserves, then just go flip for a while and get really, really good at flipping and go pay Collin's dad or go pay somebody else to learn their processes and systems and how they do things and try to network and get your contractors, do all that stuff. But that's like literally a separate business than like a rental business. Like there's two totally different operations. And I think people get those two things blurred. They just think, well, it's real estate. It's going to be the same.
Yes.
Right.
I have a problem with that. It's like trying to stay linearly focused but I could do this too. It's like, well, that's a whole different thing, you know, like, I don't know. Cause like you're saying, it's like rentals, you can pay a little bit more maybe, you know, cause what's your time horizon for holding it? Okay. Well, it's 10 plus years. All right. Well, I can pay a lot more, you know, or not a lot more, but you know, it's different. Yeah. It's a whole different business. And also the mistake I've made is trying to do too much all at once. And that's gotten me zero progress. Whereas if I just stuck at one thing and I was like, I'm just going to do strictly ag. right now, acquisitions
Mm-hmm. Mm-hmm.
for during the summer when I'm off of school, I would have gotten, let's just hopefully 2 deals.
Yeah.
But instead I was this, that, boom.
Mm-hmm.
And guess what? I got 0 deals one summer.
For sure.
And it's like, well, that's your focus. Everything is your focus. Well, what are you going to focus on? And kind of on the rental side of things too, it's a great point. Like, you can keep your W-2, and then you're lucky enough you can actually get regular financing. Maybe, it's 20% down. I don't know. Maybe there's a better way, DSCR loan, whatever it is.
Mm-hmm.
Why don't you acquire a duplex per year and just let these tenants pay off your debt service? And you do that every year, and you just pick up 1 deal per year.
Mm-hmm.
Over 15 years, you have 15 duplexes, 30 doors, and you might not be cash flowing per se right at the moment. I think cash flow is something that people have in their mind that, like, it's real, but right now especially it's not that real.
Correct.
You know what I mean?
You'll never do a deal right now if you're looking for purely cash flow, unless you got wads of cash that you want to put down on these things.
Exactly, and then it's not worth it. You should put your money in the stock market.
Right. But now your cash on cash return is garbage.
It's literally horrible, literally terrible. So like, and if you're looking like, why not have a time horizon? If you're going to be investing in a 401k nowadays, why not also do that with a duplex? Because then guess what? You're having people just pay off your debt service.
Correct.
And it just adds up exponentially. You don't really do much. All right, I'm paying an extra, I don't know, $200-$300 a month. It doesn't cash flow. All right, but my time horizon is so long on this. Who cares?
Mm-hmm.
You know what I mean?
Yes.
That's that mindset. That's that frame. Like, you see these people, text me this and I'll show you how to cash flow or whatever the hell. It's like, that's not real. Like, that's not a thing,
Yeah.
I love that point you brought up about, like, the difference between rentals and flipping. It's just a different game.
It is. And I love that you're talking about the long-term horizon. That we had this was in that same breath of the conversation. Cash flow, and I've talked about this on previous episodes a while back. It's been a while since I brought this up. But like you said, right now, with where rates are and prices and everything else, it's really hard to get significant cash flow. Like, I think even when I started in 2016 and rates were about where they are now, they were still like 5s and 6s and stuff, but the prices were a lot lower at that point.
Yes.
And so rents have gone up. And so those have increased in cash flow. But at the time I was like, I'll just get to 100 doors, $200 a door. I'm living the dream, 20 grand a month. This is amazing. Right. Well, you got a furnace that's going to go out. You got all this other stuff. Right. So you never really get, so even at 100 doors, I was like, I'm really not even making that much money right now. Right.
No.
And then a couple of years later, I had a 16 unit I had bought in that process, and values had gone up, rates went way down, right? And I refinanced that property and I pulled out $240,000 of tax-free money. And I was like, oh, there's my 20 grand a month.
Yeah.
I just had to wait a few years to refinance it. And then I got it. I didn't make jack squat on it for like 2 years. But when I pulled that, once the value went up and the debt was down, and the rates were great, I pulled out a bunch of money tax free, and that was my cash flow. And I think people, if you're out there listening to this, if you're in the rental game, model these out with amortization schedules, and appreciation schedules. I use ChatGPT all the time for this. I'll just say, hey, here's what I'm going to buy this for. Here's what my loan will be. It's on this type of a loan program. Average market appreciation is 4% here. What will my equity be in 5 years, 10 years, 15 years? And when you really look at it, like 10 years, people are like, oh, I don't know, another $2,500 for this, whatever it's going to be. Like, bro, that is nothing when you look at this thing over 10, 15 years, if you're looking at long term. And then you look at, like, what can I do? I can refinance that thing in 10 years and pull a ton of cash out, or I can sell it, or I can whatever. I can just keep it and let it just keep paying down, whatever you want to do. But you get a lot more options as you acquire those assets in the future.
Right. And delaying that gratification too. This isn't like people talk about. I think passive income is kind of a facade in some ways. It's unless you have $3 million and you put it into treasuries. All right, that's passive income, sure. But like, what, you want to earn 4% on your money? I don't know. Maybe if you're 65, sure.
Right.
But like, passive income in real estate is, I don't think of real estate like that at all, to be honest. It's who can delay the gratification the most.
Yes.
Because then, like you said, you didn't get paid anything on that 16 unit you said, or 12 unit?
Yeah, 16 unit, yeah.
16 unit for 2 years, but then you refied and now all of a sudden you're like, "Whoa, there's my 20 grand a month." You know what I mean? And it's because you're willing to, stick in the game, and now there's a lot of that, passive income, get rich quick stuff, and it's not real,
Right.
It's but guess what? If you start at my age and you acquire a duplex a year, that's very doable. For 20 years, okay, I'm 42. Now over those 20 years, I have how much equity built up? A lot,
Mm-hmm.
That's
for
for
sure.
me personally, that's my 401k, because I don't want to wait till I'm 65, or what is it, 62 and a half? I don't know. I should probably get better at my facts on this, but that's why I'm not this is controversial. So I might get some hate on this. No. I'm not a big believer in the 401k. If you're
not on this podcast, bro, you're in good company.
I'm in good. Okay.
Yeah.
I think that while it's great, tax free, blah blah blah, all that, if you just have a little bit of investing skill, why am I going to wait till I'm 60 or 65 to touch that money? I'm not saying I want that money now. I was just talking about delaying the gratification. But I know if I just have a little bit of skill of investing, that I can outperform that. You know what I mean?
100%.
And 100%. It's not worth it to wait that long and just sit there. It's great, but I don't know. I think there's better ways, in my opinion. 100%. Especially nowadays, stuff's expensive. You got to learn how to invest. If you just work a job nowadays and you don't do anything to grow your money except, put it in your bonds or whatever you do, or the S&P 500, I invest in it too, sure.
Yeah.
But I'm not like aggressively there, because I think I have the skills outside of just putting in the S&P 500 to grow my money,
Yep.
And then maybe put, your $240,000 refi, put 15-20% of that in the S&P, just because let me just get this away from me.
Little diversification. Yep.
Right, a little bit of diversification, but that cash flow, the delaying gratification, all that focusing, it's all so good and valuable. Because even if you told me that a year ago, I'd be like, I don't know, like, I think I can, I don't know about that, Corey,
Yeah. It's really, this is such a good topic, man. We'll start to wrap here, Collin, but I had another investor that I coached. We used to have a mastermind that my wife and I ran 4 years ago or whatever. And he was in that mastermind, and then he bought a bunch of stuff. Like, he did great. He bought like 40 units in like 18 months, but it was almost a little too quick, because some of those, he didn't have the capital stack to like cover some of the rehabs that were going to come up and some of the other things. Anyway, long story short, he's kind of coming back. He's getting himself out of all that mess that he put himself in. And he's like, man, I just need to be making like 120 grand a year. And then I could quit my job and just do this full time. But I was like, okay. I said, how do you plan to do that? He's like, I don't know, man. Like, whatever. I said, well, let's model this out. Like, when do you want to be quitting by? And he said, like, by 5 years from now, I want to be able to quit my job. And I said, okay. I said, what would keep you from buying maybe 2 or 3 BRRRR deals a year? Where you're buying them, you're going to have, and for those of you that don't know, BRRRR, buy, rehab, rent, refinance. It's a great capital recycling strategy, a great way to get infinite returns. It's a little tougher these days to get infinite. You may still have some money stuck in those deals nowadays. But either way, we looked at that and I said, dude, let's imagine you just bought like 3 250K duplexes, right? The ARV is 250. You're into it for whatever 80% of that is that's 200,000, right?
Yep.
You do that every year. In 5 years, you now have 5 of those that you started the clock on. And you have all of this equity. So now you can refinance, even at 80% LTV now at refinancing that thing. You have your 120 grand of tax-free money that you still keep the duplexes. You don't have to sell them. Right. You keep them. You pull that money out as tax-free, unless you sell. Somebody's going to be like, oh, it's not tax-free unless you sell. Okay, we got it. If you sell it, you got to pay tax. Okay. But you just keep it until you die. You pass it on to your kids. You 1031 exchange it at some point, whatever. There's a bunch of ways to mitigate tax. But anyway, we looked at it. I think he was like, oh, whoa, like never thought of being able to let those, you don't have to buy 100 of them. You're just buying 3 duplexes a year, bro. That's it. It's not crazy. We're not asking you to go, take over the world here. Very manageable for somebody with a strong W-2, 5-year plan, easy to get out of it. Right. And then if you do that every year and you just keep doing 3 a year, every year you've got your retirement plan and your income paying you every single year.
401k, I promise.
Oh, way better, dude. Way better.
I get the furnace goes out. I get that, but like, come on, like, let's just think about it a little bit. I get it. Don't buy a rental with no glass shower doors and all. I don't want to hear any of that nonsense of my tenant broke my glass shower door. Well, why do you have a glass shower door in your unit anyway? You know what I mean? Like, I saw that on Twitter. I was like, dude, come on! Like, he's crapping on real estate investing, and people ask him, "What'd you buy the deal for? What's in the what happened?" And then you found out, and one of the things was a glass shower door. I was like, why do you have a glass shower door on your rental unit? That's one more thing to break. You know,
you gotta child-proof your rental sometimes. Right?
right. And like also with people my age too, it's like it's hard for it's hard to get an FHA loan. I understand that, but hey, the 5%, the spread on that. Okay, I got to put 5% down versus 20%. That's pretty crazy, you know?
Yeah.
And I might be wrong on this, but I believe as long as you live in the unit for a year, you can keep FHA. I believe. Mm-hmm. I could be wrong.
Yeah. Up to 10 properties in your personal name, but they get a little weird about after like 4, they start asking a little bit more questions is what I'm told. I've never done it that way. Yeah, I've never done it that way. I wish I would have started. And what Collin's referring to is house hacking. And so what he's saying is you put 5% down, you go live in the duplex on one side, you got a tenant paying your mortgage on the other side. Mm-hmm. After a year, you go find another one, you move out of that one, you put another tenant in. Now you're cash flowing on that with only 5% down. You got your 5% back pretty soon. Now it's an infinite return.
Yep.
It's a great investment. You hold that sucker for a long time. You build equity as your tenant pays your debt. And as the market appreciates, what I call the wealth cone, you create a wealth cone. Ooh, and then you go do it again and again and again and rinse and repeat until the FHA cuts you off. And then you just start burring deals. And you do it the burr way.
That's my plan.
There you go.
You know, I'm looking right now. If anyone has a duplex, I'll pay $200, $300 out of my pocket because I know it'll be cheaper than renting. And I get the whole rental versus buying debate. I get it. I know the math is there, but not if you do it this way. It's in our favor in this way. I don't want to hear that victim mentality anymore. Stuff's so expensive. Figure it out, bro. There's a way. There is a way.
Yes.
You know, there is a way.
It's been expensive to everyone for the history of time. I don't think anybody's been like, man, real estate, other than like 2011, 2012. I don't think anybody's been like, real estate's pretty cheap right now. It's a good value buy. Like it's always perception wise because it goes up every year. Historically, people are like, dang, real estate's so expensive now. Right.
Right. Hey, you just bought a deal that's at retail. Like, of course you're not making that much money or, whatever. You kind of bought yourself into that. Do the math. It's pretty easy,
Yeah.
Buy yourself a deal where there's a spread on it. It's basically a gold mine. Technically, someone's going to live there. That's the great thing about real estate is last thing I'll say, multifamily duplexes. No matter what, me and Corey have somewhere to live. Everyone has somewhere to live. You're just basically buying an existing business that will never run out. Will never run out of a customer. So it's the best business in the world, and it trades at a great multiple. It doesn't trade at a 2x multiple. It trades higher. It's the best business in the world.
I agree, buddy. I agree. Well, bro, this has been fire, dude. You and I could probably go for like 3 hours with our conviction of real estate investing.
Hey, maybe once every 6 months, I can come.
I like it, dude. Maybe. I would love to have you back on, dude, for sure. We keep riffing as you're learning things, as you're getting out into the wild, as we'll call it here after college.
I'm not in the wild yet.
Yes.
Maybe I'm going to get my ass handed to, pay some money.
Hey, that's a good episode. That's going to make a great episode if you do.
Yeah.
Yes. Yeah. Well, Collin, we always wrap with one fun question. And the reason I started doing this was, it's called the Wisconsin Investor. We have people from California, Colorado, some of those not as much value markets that are looking for a place to put their capital. We think Wisconsin is a great place for. A lot of people don't know about it. So I wanted to create this podcast to let people know about Wisconsin. So guys, that's a little fun question. Favorite Wisconsin tradition or place to visit in our great state? What would you say?
I would say, let me think. I'd say tailgating, whether at the Brewers game or the Packers game. I've tailgated for basically all of my life. I'd say a decade, right?
Yeah.
It's just the best time. You just get to make some food, make some burgers, cook up some hot dogs, go enjoy some good baseball, or go enjoy your Packers. Yeah. Also, the one spot you absolutely need to hit in Wisconsin is Lambeau Field, bar none. I know people that come from Madison, they go to Lambeau, and they're from California, Boston, New York, wherever. They go to Lambeau, they're like, I have never been to anything like that ever in my life, and I don't know if anything will top that.
Yeah, dude.
Am I putting a high expectation on it? Yes, because it reaches that. It's that amazing. It's literally it's the best. It's one of the best days of my year every year. Going to Lambeau.
One of my favorite things to do is take people from out of state or out of this area that are just football fans and bring them to Lambeau, because I take it for granted. I grew up 30 minutes outside of Green Bay, so I'm just like, I've been going to Packer games my whole life. Like, what's up? Right. And then they're like, bro, you have no idea how special this is. Like, this is such a cool environment. It's so amazing. So
what I say is, it's like my first time going to a Packer game every time I go there. Maybe not for you, but I go to 2 games a year. Every time I've gone the last 4 years, I'm like, this is my first time here. I'm like a kid in a candy shop. It's amazing.
That's awesome, dude. I love it, brother.
I just love it. I love it. And the Wisconsin people, probably the nicest people you'll ever meet. All of us are so welcoming. We're all very nice. We'll give you our time of the day for the most part. You have the people here and there, of course, but for the most part, you have the Wisconsinites are just so welcoming. They're happy to talk to you. They're happy to, whatever,
Yeah. So. For sure. Yeah.
Collin, if anybody wants to get in touch with you, man, either to talk about doing some deals with you or whatever the case might be, man, what's the best way for them to connect up with you, bro?
My email, I don't know if this is the best way. My email, collin@blackridge-co.com. My phone number, I don't care that I'm putting it out here, 414-429-9130. Call, awesome, text, email, whatever you want. If you have a deal, I'm buying.
Love it.
We're buying,
man. Love it. Well, bro, I appreciate you being on here. Guys, if you got some value out of this episode, please share this out there on your socials and your network. We love getting the word out there. We love helping other investors in Wisconsin, or they're looking to get in Wisconsin. Also, if you are in the Madison area and you want to get involved in acquisitions, this is why I was trying to recruit Collin here. We are looking to add some people to our team. We need some people that want to go out and solve some sellers' problems. And so if you think that would be something you're interested in, we don't want people who are just going to come here and jump. They come on the team, they just want to learn for 6 months and then go start their own business. That's not what we're looking for. We're looking for people who want to grow with us for the long term and be a part of an amazing culture and an amazing team. And we'll teach you all kinds of great stuff. You'll be able to buy deals off market. Like, there's a lot of benefits to being on our team. If you're interested in investing in our company with us for the long haul, we will invest in you for the long haul as well. So you can reach out to me, Corey, at ibuywi.com. You can send me an email there if you're interested in learning more about that, and we'd love to chat with you about that and see if you'd be a great fit. Join our team.
I can attest to this. Corey is a great dude. Got breakfast with him and his team. Super cool dude. Who wouldn't want to work for this guy? I don't know. You're kind of
like
crazy. Don't go work at the bank. Don't
right.
do that job. Just trust me. I don't think you want to do that. You want to work.
That's right. That's right. I appreciate that, Collin. Appreciate it. Yes. I can't hire Collin, but I will do deals with Collin because he's a go-getter.
Yes.
So.
Hey, and if he ever comes to Milwaukee, me and my father will be the face of that. We know block by block, each ARV.
Love it, dude. I love it. I'm going to hit you up with that too. That's probably in the future. So awesome, guys. Well, thanks again for tuning in. We will see you guys on the next episode.